All right. Good morning, everybody. It's time to do some macro. Oh, Luca, your mic is on. I think I got it for you. Oh, there you go. Good morning, everybody. Yeah. All right. Let's get our macro on. Let me share my screen if it will let me. There we go. Let me. All right. Cool. So, welcome to QuantBox Live, where we're going to uncover the best fundamental opportunities across the global markets. My name is Wayne McDonald. Not only am I the founder, but I'm a Harvard-educated economist, and I love macroeconomics. If you're watching this video on YouTube, well, guess what? Right now, it's just after 6:30 in the morning, New York time on Wall Street. But if you're on YouTube, you're watching this at 10 a.m., so you are way late. Why don't you consider trying QuantBox? It's less than $8 for a trial. All right, with that being said, let me do the disclaimer. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Cool. First of all, just for everybody, there's yesterday's video. So today is Friday, the 26th of May, and that's where the new recording will be in, I don't know, half an hour. So let's get on with it. Let me log into QB Pro. Got to have the right Google Gmail to get onto the Google Cloud. Logging into the cloud. Time for a sip of coffee. Cappuccino. There we go. Come on now, Bubba. All right, let me expand this. Let me expand this further. Zoom in. Cool. Let me move my drawing tool out of the way. Oh, yeah, it won't do that anymore. There we go. All right, cool. Let's start with what? The strong buys. None of this is going to change that often because everything on the left is quantitatively created. So again, QuantBox is looking at all these assets like dollar and Swissy and yen and South African rand and there's Japanese stock market and the Canadian dollar. And it's looking at all these things, but it's breaking things down and scoring them based on COT data, retail sentiment, seasonality, trend reading, which is technical analysis. It's looking at GDP growth, inflation, unemployment, interest rate divergence. And, look, that stuff doesn't change very often. So those are the fundamental trends. What we're looking at in the mornings here is looking at assets that are moving away from those fundamentals and therefore are either reversing or out of position. And to figure that out, you have to use technical analysis. But anyways, everything to the up and right is good. Everything to the bottom left is good. Everything up to the, up here, up left is bad. Up right is good. Up left is bad. So S&P 500 is up, okay, but has a score of -1 right now. Bitcoin is up, but has a score of -5, right? So there's a lot of things that are out of position. But if you recall, technically, yesterday's video, the day before's video, the day before's video, the day before's video, many of these assets have hit logical, technical targets. And you would assume people are taking profit, which would, by definition, put them out of position. Meaning, if the market was heavily short an asset and then they hit the bearish target, everyone gets out of those trades. The broker sees everyone is short, so to get them out of those trades, they have to go long to offset, and you get green candles, which is just the result of everyone exiting a short. Guess what? These assets may be up. So they might just be being rejected at targets, as they should. So everything might be right as rain. We're also very close to the end of the month. So this is typically when you're taking profits, and you might have to wait a week or two to set up the next trade. We have PCE today, which is a big event risk. This is if you read the Fed meeting minutes like I did, they specifically say we look at the PCE deflator to make our judgment call on inflation and the successfulness of the policies we've implemented. So this is like the Fed is going to watch what's happening today. Maybe that's an event risk. Also, we have a long weekend in the United States of America. So if there's going to be a resolution to the debt ceiling, they kind of have to do it now, or they might miss a barbecue. Nobody wants to miss a barbecue. Okay. In particular, politicians, because that's where they get votes and free hot dogs. So they want to kind of get that done sooner than later. So, anyways, bear all that in mind. And then we got non-farm payrolls coming up soon, out there. So, lots going on in the world. You can see yesterday when we look at all the different global stock markets, the stock indices over the few days have been down, 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 down. And yesterday was a stable day over the week, right? A stable day. Everything was slightly up yesterday. And that might be because of that huge move in NVIDIA. And I believe it did close over the $200 billion day mark, which makes it the biggest one-day move for any stock in the world, surpassing Apple that made 190 billion one day. Well, now NVIDIA, I think, got it. And if I'm wrong about that, well, I'm sorry. All right. So, anyways, these may all be out of positions. Let's take a look at the score chart summary. Just the same thing, only different. One of the things we talked about yesterday is actually finding something that is currently neutral, and then looking to see if there's setups in the near future. One way to look at it is maybe something is very, very fundamentally bullish, but is currently bearish technically. Okay, that's one way of kind of looking at it. But you see on this one, green, 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 technical trend is down, green, but then there's down, down, down. So, it's going to be difficult to find some of these things. But like, for example, in Aussie yen, zeros can turn to ones, make it more bullish. Okay. But anyways, I don't see anything truly standing out today. Do Yeah. Still strong sell, right? Strong sell, strong sell, sell, strong sell, sell. You notice it's all buying dollar. And then up here, buy dollar, buy dollar, buy dollar. All right, I guess we're long dollar. Okay. But the yens have gone neutral. So maybe that's where I'm going to focus today. Just a quick update. We will be getting new data in the commitment of traders report around 4 o'clock. So tomorrow morning, QuantBox will be updated, maybe a little bit sooner than that, but certainly by tomorrow, this will be updated. And right now, investors are heavily short yen. But remember, these yens have hit targets. And that's where you're going to get short-term yen strength based on profit taking. So maybe that's the next move we want to pay attention to. If the yen pairs are down today, or even the next couple of days, that sets up a longer term long. Okay, lots of risk still in the market. We got to be careful. Oil is becoming more and more bullish. It's a very interesting thing. Remember, Saudi Arabia, almost a week ago now, said that hinted that they want to drive oil prices up. So that might be the next new thing as well for you. Crypto's neutral. Metals are still long, but we're in this recession. The market is worried about recession. That's the sentiment in the market, right? We're worried about recession. And that's going to bring metals down and other commodities down some more, but people are still very, very long. I'm wondering if there's still a leg down in commodities. And I'm thinking it through like the Fed. So the Fed, maybe not this meeting, by the way, but the Fed next meeting, maybe later, like not the June meeting, but what if the Fed, let's say the Fed raises in June and then pauses after, that will probably impact commodities negatively, because that means the Fed is still trying to push the economy down, and that kills aggregate demand for everything, in particular metals. Also, if you're trying to hedge like gold, there's no need to hedge if inflation's falling because the economy is crashing. Another way of looking at it is you have to choose between losing your house or losing your gold position if you lose your job. And you're like, you know what? I'll sell some gold to pay my mortgage. Like you're always going to make that choice. I like gold, but I also like Chick-fil-A. That spicy deluxe sandwich. I'm hungry. I don't want to eat my gold. I want to eat my Chick-fil-A. So yeah, so you end up selling gold last, kind of thing. But there still may be risk in the market in which those occasions would make you sell gold. Then down the road, once we finally do get to a pause, or more people think a cut is coming, then suddenly we get this giant move again to the upside in commodities based on the Fed, the monetary policy is done, the recession is only shallow, but persistent inflation, and all of a sudden metals and grains and stuff like that go up. Real estate stays flat. Okay. So anyways, that's longer out. That's not for today. So let's move on. .com. Heat map currently. So what's working right now? NASI's up. S&P 500 is up. Oil is up. Bitcoin's up. Gold is up. Japanese stock market, Nikkei is up. Okay. What does that mean instantly to me? Sell the dollar. Risk on, sell the dollar. Okay. Risk on, sell the dollar. Conversely, what's the downside? South African rand is more popular than the US dollar. Okay. So so if we thread this, I'm only looking at the top line and I instantly think sell dollar. Check this out, the next line. Pound dollar up 0.35, Kiwi dollar up 0.32, Aussie dollar up 0.31. Okay. Yen is weak too. Check this out. Aussie yen up, Kiwi yen up, pound yen up. Now, not by much, but they're not down. So again, I think today with the PCE, there's going to be too much volatility and we're too close to targets for the dollar. So why don't we look at these yens then and see if there's a buy a dip opportunity for some of these yens? Okay. So pound yen has been a laggard, but remember the trade plan a couple of days ago? The trade plan a couple of days ago is we don't know anything about the pound, but we're definitely selling yen. So this pair should go up. And a couple of days ago, I said, look, you buy if you're a bull, you have to be a bull in that situation. If you're not a bull, then you don't have a bias. If you're a bear, you're doing the opposite. You're waiting for a breakdown to the downside. I'm a bull. So I said a couple of days ago, your first opportunity is buy in there. Let me redo that and just call that plan A, buy at the bottom of the range. And the second one is let it break out of the range and do one of these doodads. And that's your plan B. And that might be what's happening right this second. So a few days ago, at the beginning of the week, this looked mediocre. Now it's gone. Okay. Okay, cool. Were the moving averages still helpful? Yeah, for sure. Or for sure, as the sheep say. All right. So, anyways, that one's interesting. This was an on target, not interested. Fundamentally, love it. Technically, hate it. Okay. So, not interested. I've been a hard pass on this all week, every day. Not interested. And check it out. It ain't moving. Why? Technically, it's not supposed to. So it's not, which makes me feel good. Now, New Zealand decided to raise interest rates and this collapsed. We might be in a situation where you buy it back. Technically speaking, that's a buy zone for June. You're like, Wayne, it ain't June yet. You're like, oh, well, I have a crystal ball built into my watch, and I'm looking at June already. Okay. Some people have watches that constantly look at last week. you know, I'm way into next week and next month. So, anyways, maybe that's enough. I don't know. I don't know. That 200 EMA represents a fair market value. It's the neutral zone. There's no bulls are not winning on this. Bears are not winning. Nobody knows who's winning, but that might be an opportunity for the at least the yen weakness to continue through yield curve control. Okay, so it's an opportunity. Oops, let me do it this way. It's an opportunity for yen, or I mean Kiwi, to get back into the game, and so I would thread the needle this way. Um, Maybe you get something like this next week, but remember, it's a laggard for a reason. The central bank said something that pushed everybody out of that trade. So your risk now, of course, is you're like, all the yens are going up. Yep, that's true. But that has pretty decent potential too. We don't know. We don't know. That's the thing. We don't know. So be prepared for risk up at 66 if you're a bull. Okay. Did I say 66? Sorry, 86. So if you bought it around 85, okay, or even 84.50, it's already been 4 hours. Your next level of risk is up there around 86. Okay. So that's where you maybe jam your stop and hope for the best. This yen pair, I talked about this yesterday at FX Bootcamp. Technically, I'm supposed to take profit here. I think I'm up about 700 pips or something like that. So that's a nice trade. Cool, that's working. So my decision really now as a technician, not as a quantitative analyst, because remember, nothing fundamentally has changed. The only thing fundamentally that would change is a change at the Fed or a change of the Bank of Japan. Well, that hasn't happened today. So I have to decide, do I want to stay in here and let that move develop or take profit? Well, a conservative trader would take profit. Maybe I'm not conservative on this one. Who knows? But anyways, I have to make that decision. The second thing that could happen is what we call an out of position trade, where we keep riding this 21 and it heads up and we hit June target early. Let's say around non-farm payrolls and before the Fed meeting. So the dollar stays strong, the yen stays weak. I get way up there. I hit my target early, and that screams take profit. So I could say, well, look, I'm riding this 4-hour 21. Everything fundamentally seems to be based okay. So maybe I'll take that risk because right now it's opportunity cost. I can only make what I'm at 33 and a half, I'm at 36, I'm at 37. So like the worst I can do is make 350 300 pips, 350 pips. That's a pretty good worst case scenario. If I zoom in a little bit, I'm using parabolic stop and reverse technically to manage my stop. Oh, of course I can't do that on a 15. I have to stay on the 4. Hang on, let me zoom in. So that means I move my stop from here to here to here to here. So now I'm at 37.24. Okay. Now, of course, I can move it way up here and say I'm worried that we're at the top. Okay. This would be more logical. That kind of stuff. I'd say here would be most logical, but right now I've decided to use PSAR, so that's all. Okay, so there's the thought process there. Aussie yen. Okay, it's doing okay. Remember, it hit target. This was our projected target. That's our projected bullish target for the month of May. The entry is in here. This entry predicts that top. It happened. Then profit taking was supposed to occur. And it did occur. Now we sort of have a flat move, but this can be in play now. Once again, has nothing to do with May, has everything to do with June. So if you're bullish on Aussie yen, okay, remember we were looking for pairs that were neutral. Remember, we looked at all those things. We want something neutral because we're trying to get something. We want to buy an asset that's neutral before it turns bullish. Well, how do you know that? Quantitative analysis of macroeconomic data, and you open up your chart and you do technical analysis. It's how you create value. That's your job, right? And if you get that right more often than not, you'll profit. So that may be your bullish trade if you are a bull. Okay. Remember, biases change all the time. It's okay. Where's my QB? Biases change all the time, even if you're an algorithm. So we could look at that Aussie yen, for example. Let's see if this is going to work out. Oh, I can't see it. Let me zoom in. I do that. I do this a lot. Odd yen. Boom, boom. Okay, and this is QuantBox going bullish, bearish, and neutral, right? So way back here in the mid-April, we were QuantBox was bearish quantitatively. There was probably a lot of downtrend at the time, technically speaking. Okay, and then somewhere around the beginning of May, we went from -4, then it went to -3, then it went to -1. Then we're right now all of a sudden in here, you see how it's turning bullish, 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 right? Bullish, 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 bullish. Okay. And so it's just these last several days that these blue bars are representing how bullish quantitatively, but you can see the price coming down at that point, which might be a nice little opportunity to buy the dip. Right? So you almost want to find something that is fundamentally bullish but technically bearish, which then puts QuantBox neutral. You see, because if you're a bull, you're trying to buy a dip, right? So, anyways, so it's saying the 200-day is at 91. We're at the 200-day right now. Kind of interesting. Anywho, yeah, there it is. You see, isn't that nice that QuantBox knows that? Hey, you're sitting on the 200-day moving average. It's just an algorithm. That's how it knows. It does the math. It can't read charts, but it does the math. Isn't that cool? QuantBox has to calculate its own moving average. It can't look at one. So, anyways, so I'll leave it at that. I think I'm going to focus on the yens. I think dollar's going to be tricky. Remember, we got PCE today. That's a big one, as they say in Georgia. Okay, you got itty bitties and you got big uns. PCE is a big one. I'll just show you how to do this. Pop this up. Bada bing, bada boom. You can focus on dollar only. Okay, regenerate the chart. Okay, and PCE, you only want to look at high. Okay, anyways, PCE, very, very, very important because this is what the Fed uses to make their decisions. Nice, right? Euro yen. Well, you'll have to look it up, Denise, but it wouldn't be much different if you're looking at correlation. But remember, Euro yen is a laggard. We know that from previous analysis that Many things have hit target already, and euro wasn't even remotely close to it. Like it's like some people are finishing their hike and others are still in the parking lot, right? Euro's still in the parking lot, right? In its spandex and fleece outfit that they spent way too much money on. But they haven't even started hiking. But they look good, but they haven't even started hiking. So, anyways, whatever that means, I will see you guys later. I hope QB Live was helpful this morning. It was good to see your smiling faces. Peace on earth. May the pips be with you. May our profits be above average. And again, if you're on YouTube watching this at 10:30 in the morning, it's not even 7 a.m. here. Why don't you try QuantBox? That's quantbox.co, $8 trial.